Hello students, I Prabha Sharma welcome you to the next class of the introductions of the accounting. So it is a elementary class to give you the knowledge about to the accounting system. So today we will discuss about the objectives of the accounting and the difference between the bookkeeping and the accounting. First of all, try to understand the objectives of the accounting. The first objective is to maintain or to record the financial transactions of the business concern. But when I am talking about to record the financial transaction, the transaction should be in the terms of money in the financial natures, but related to the business nature. And the events would indicate when it is happening of the events related with the business and the financial natures, then only it will be recorded. Following by the principles of accountancy refers to by using the rules of debit and credit of the accountancy. So the first objective of the accounting is to record the financial transactions by using the principles of accounting. The second point is to determine the profit or loss during the accounting period for preparing the income statement. So first, try to understand the objective is to prepare the profit and loss account for deriving the results of the net profit or the net loss. The statement can be prepared with the help of the trading accounts which show the gross profit or the gross loss, means the covering of the cost results only, and then the preparing of the profit and loss account is there, which indicates to the net profit or the net loss by deriving the all the results, all the expenditures and all the expenses, covering of the recurring and non-recurring items. Then the final results will be derived by the profit and loss account. So the income statement is consisting with the trading and profit and loss, which help you to derive the gross profit or the net profit as well as the gross loss or the net loss. Third is to determine the financial positions by preparing the balance sheet. So the objective is to know about the financial position, and the financial positions can be derived with the preparing of the balance sheet. Balance sheet provides the disclosure of assets, liabilities and the capital. So the equations leads to the asset is equals to liabilities plus capital. Both should be equal. But when the assets are more than the liabilities, outside liabilities, then only the business positions is referring to the solvency positions, otherwise declared as insolvency positions. So it means the data available to the balance sheet provide you the solvent or the insolvent positions. The fourth is the help to the management for making the decision in making the budget or as well as to make the future plan, means the forecasting. So the fifth point is it provides the valuable information to the internal users as well as to the external users as per the need. Generally, the balance sheet provides the information to the different users, internal users like the management, and the management on this basis take the decision and making the decisions, like the owners they want to know about the safety of their funds, as like the external users, creditors, those who are providing the credit goods to the business, they want the returns safety of their money also. So in the same manner, it is useful for the internal and external. It helps to the management in protecting and controlling the asset. If there is a basis of the asset is there, so it also helps to the management to take the timely decisions to control the assets. So overall, just to try to understand the objectives of the accounting, first to maintain the records of the financial transactions. Number two, to determine the profit and loss during the year. Number three, to calculate the financial position of the business. Number four, providing the informations to the management to take the decisions. Number five, that means the providing the valuable information to the internal and external users. And number six is also providing the management to take the measurements to protect the assets. So now I'm moving toward the difference between the bookkeeping and the accounting. Generally, the bookkeeping is only the recording. It don't do for the aspect. But the accounting is doing after the recording the so many other aspects. So complete process is used in the accounting, and the bookkeeping used only to record the transaction. The further steps are not to be used. So the first of all, try to understand the meaning on the basis of the difference. The bookkeeping is used only to record the transaction in the terms of money, and the same work is to be done by the accounting also. First to record the transaction, but the further steps like to classify, summarize, and interpret and the communication also related with the recording of the transactions, business concern. So bookkeeping is just like the one part of the accounting. So we can say the accounting is broader than the bookkeeping. The second point is stage. Bookkeeping is the because recording it is the primary needed stage. So it is to be done at the primary stage. So accounting is doing the primary stage as well as the other stage also, like classifying, summarizing. So it will start from the other stage also. So we can say it is consisting with the secondary stage of the process also. Now, third point is the main objective of the bookkeeping is only to record the systematically the transactions, but the accounting is to record the systematically and furtherly to convert the items to know about the net profit or the financial position of the business concern by preparing the trading profit and loss and the balance sheet. The nature of job in the bookkeeping is it is a routine nature, means the day-to-day natures of the transactions are recorded here, but the accounting is consisting with the further to the routine natures items to convert into the analytical and decisions making natures. And now the bookkeeping is performed by the junior staff, so much expert staff is not needed here, but in the accounting the expert or the senior staff is required who have the complete knowledge of how to prepare the accounts. Now the bookkeeping, the skill, only the manual skill is required, mechanical skill is required, but in the accounting, the special and expert skill is required to analyze and interpret the data. Thank